The broadcast is now starting. All attendees are in listen-only mode.
Hello and Assalamu alaikum. I am Kashif Kamran, your tutor. Right after the break, we are continuing with the session 2 on revision for strategic business leader exams for December 2018. And right before the break, we were focusing on risk. And now we are focusing on the last area, which is organizational control and audit. Now, this is yet another area which has been very repetitive and can be very important in your strategic business leader case study. So let's be very specific about the key areas to know from this topic, organizational control and audit. Now, the key areas for the revision course includes the components of the internal control systems, and all of you should have a very clear idea of what are the components of the internal control systems. You must have also done them in the F8 exams. Then you should also be knowing about internal auditor. And again, internal auditor and audit committee is not an area which is specifically building up in the SBL exams. Internal auditor and audit committee also have associations with your prior papers like F8, F4, and even the F1 exams. Need for internal audit department and section 404, internal control reporting by the management and the auditor. This is very, very important. Section 404, very, very important. And the other things are very simple. Knowing the components, knowing the internal auditor and the audit committee, and knowing the need for internal audit department, when to have the internal audit department. Components of the internal control system. Now we know in every organization, particularly the complex organizations, the large organizations, the listed companies, internal control systems plays a very, very important part because it brings an orderly and efficient conduct of the business. If an organization have proper internal controls, no doubt the risk of fraud and errors are mitigated. But beyond the risk of fraud and errors being mitigated, it brings more of an orderly and efficient conduct of the business. Let's understand what are components of an internal control system. Now, from your F8 knowledge, you know there are 5 components of the internal control system. Let's do them one by one. The first and the foremost component of an internal control system is the control environment. The control environment is the overall tone. The control environment is the overall tone or approach to the internal controls set by the management. Now, the strategic management, overall tone, because the culture, the environment is made by the top management. So tone is the environment, tone is the culture. It is the tone or the approach to the internal control set by the management. Is the management really committed about internal controls? Is the management really willing to spend time and efforts on internal control? Or is the management very lazy about internal controls? Now, just imagine from a family business to a listed company, the tone will change because the family business will consider control as unimportant, whereas the listed company will consider them as important. So this tone here will be very flexible from one organization to another organization. It basically demonstrates management commitment to establish a sound system of internal control. So it is basically the management commitment. You will see this commitment more in a listed company, but you will see less of this commitment in a family business. So it is a commitment, and this commitment will vary from one organization to another organization because a lot of organizations perceive controls as cost rather benefit. And yes, many organizations do perceive internal controls as benefits rather than cost. So the perception of the management, the tone of the management will vary from one organization to another organization, particularly from being a listed company to being a non-listed company. and more importantly, being a family business. Secondly, entity risk assessment process, determining the risk associated with the company's objective and how they will be mitigated. Now, you've just got to know the entity risk assessment process. That in the entity risk assessment process, you need to identify the risk, you need to assess the risk, and you need to mitigate the risk. Internal control system is also a risk mitigation strategy. When you speak of the TARA model, the internal control system is part of the R reduction. So when you speak of the reduction in the TARA model, internal control system is part of the reduction strategy, risk reduction strategy, because internal control systems, sound internal control system in any organization can act as a risk reduction. So entity risk assessment process is part of the components of internal control system. You need to assess the risk. You need to assess the risk. You need to identify the risk. You need to assess the risk. Which risk? Operational risk. Because this is the internal control system. Internal control system. So you're looking at the operational risks. Information and communication is another component of the internal control system, gathering the correct information and communicating it to the correct person. Now that's very important, because when we speak of the internal control system in an organization, the communication plays a very critical part. That the communication is going from the right person to the right person, and it is collected from the right person, and it is communicated to the right person. How much time the business spend on making communication systems? You must have seen communication systems like MIS, Management Information System, Executive Information System, EIS, DSS, Decision Support Systems. Now, organizations have these systems, the communication systems within the organizations, which ensure that the correct information is gathered and the correct information is communicated to the correct person. Control activities. Control activities are the policies and procedures in place to ensure controls are effective. Control activities are basically the reduction. Control activities is basically what you have learned in the F8 paper. Control activities, security, passwords, authorization, segregation of duties, bank reconciliation statements, control accounts, trial balance. These are all control activities which, if in place, reduce the chances of fraud and errors. And monitoring of control. We know the internal audit department. Internal audit department is responsible for the monitoring. So these are 5 components of the internal control system, which you should remember for exam paper. One is the control environment, which is basically the tone of the top management. Then is the risk assessment, which is the carry forward effect from the previous topic. Then is the information and communication, which is taking the right information from the right person and communicating it to the right person. Then the control activities, which is basically the policies and procedures through which you mitigate the risk. And then comes the internal audit department, which is responsible for monitoring of risk. Structure of the internal audit function. Now, as per the corporate governance, this is the structure of the internal auditor. The internal auditor is under the audit committee, and the internal auditor reports to the audit committee. So if the internal auditor is reporting to a finance director, that will not be the best practice of corporate governance, because the best practice of corporate governance is that the internal auditor has to report to the audit committee. There is an article on internal audit, which is a must to read article. And if you read this article in full, you will get maximum exam knowledge you need for appearing in the SBL exams. Audit committee monitors, directs, delegates, and creates the internal auditor. So see how many things the audit committee do for internal auditor. They monitor the internal auditor. That's very simple. They direct. Direct means they give orders. They give instructions, orders and instructions. to the internal auditor. They delegate. Delegate means they give work. Delegate means they give the scope of the department. What is the scope of the department? What the department should do. And creates. Create means they hire the internal auditors. They appoint. They appoint the head of internal audit department. Appointment. So they monitor, they direct, they delegate, they create. And in response to that, the internal auditor, being under the audit committee, reports to the audit committee. Now, when we look at the audit committee role specific to internal auditor, the audit committee should review the company's internal controls and should monitor and review the effectiveness of the internal audit function. So that's a very simple role of the audit committee, monitoring the internal controls and monitoring the internal audit function in an organization. It further specifies that where there is no internal audit function, the audit committee should. If a company does not have an internal audit function, then the audit committee should consider annually whether there is a need for an internal audit function. Make recommendations to the board. They should make recommendations to the board that should they have an internal audit department or should they not have an internal audit department, and disclose reasons for absence in the annual report. So if there is an internal audit function, the audit committee will review the internal audit function. And if there is not an internal audit function, they will consider annually whether there is a need for one. If there is a need for one, they will make recommendation to the board. And when there is an absence of an internal audit function, they will make reasons in the annual report to the shareholder why there is no internal audit function in the organization. So the shareholders will be interested in knowing the reasons of the absence. Now, need for an internal audit department, right over here, whether there is a need. Now, the need depends upon many things, and that's where you can get an exam paper. The need can be a case study, as with the P1 exams. The need of an internal audit department depends upon the scale, diversity, and complexity of the company's operation. Bigger the company, there is a greater need for an internal audit department. Number of employees, more number of employees, there is a need. Changes in organizational structure. If there is a structural changes, like the organization becomes decentralized, then there is a need for an internal audit department. If the organization becomes flat, a flat organization needs an internal audit department. So if there is a change in the structure of the organization, like the organization becomes flat or the organization becomes decentralized, changes in key risk. If the organization is exposed to risk, the number of risk identified in your risk registers are increasing. If the number of risk in your risk registers are rising, then there is a need for internal auditor to be in your company. Problems with internal control systems. If there are any problems with the internal control systems because you don't have the internal audit department, and in the absence of the internal audit department, if there are any problems in the internal control systems and these problems are rising, if you think these problems are rising and the internal control system is not being very good in the recent past, then you should hire the internal audit department. And obviously, you will make a feasibility study of hiring the internal auditor, the cost and the benefits. Because ultimately, when you make a recommendation to the board, you need to have the commercial acumen. Because in the exam, you need to demonstrate this commercial acumen as a skill. So you need to do the cost benefit analysis. Commercial acumen. And the last thing, reporting on internal controls. There is a requirement in the US Sarbanes-Oxley, which is the Sarbanes-Oxley Section 404, rule-based governance. It is mandatory for listed companies to have a reporting on internal controls. So Sarbanes-Oxley Section 404 makes it mandatory for listed companies in America to make a reporting on internal controls to the shareholders so that the shareholder have an idea about how effective the controls are in the organization. Sarbanes-Oxley Act Section 404 requires management and the external auditor to publish a statement for external usage that reports on the adequacy of the company's internal control over financial statements. Requires the management and the auditor to publish a statement. So it is not just the management reporting on internal control, it is also the auditor reporting on internal control. And now imagine the pressure the management have. Because if the management says controls are effective and the auditor says controls are ineffective, see the challenge for the management. Now it requires management and the external auditor to publish a statement. So both have to publish the statement and both should have the same conclusion. So if the auditor is saying controls are ineffective, then the management should say the same. And if the management is saying the controls are effective, the auditor should say the same. So see the pressure on the management. They cannot do wrong reportings. This is the most costly aspect of the legislation for companies to implement, because see, when you need to report on the internal control, is that so simple? You need proper systems, you need proper resources, you need proper departments, because you first need to invest in the internal controls. If your controls are stronger, then you will report the controls are stronger, right? So first, there is a lot of cost to be incurred on your internal control systems. First, you need to incur a lot of investment in your internal control systems. You need to make them as good as possible. Then only when you review them on an annual basis, you will tell shareholders that the controls are effective. So this is the most costly aspect of the legislation. And this is a very costly effect for small companies in America which are listed. Because in America, we do find tier 1 companies, tier 2 companies, and tier 3 companies. So for a smaller companies, this is a very major cost. Because to maintain a system, to invest in a system, and then to report on a system is like a very costly measure. And giving the fees to the external auditor, commercial acumen. So just one last thing before we see the report. When you're looking at internal controls from your examination point of view, first of all, you should be knowing about the section 404, which is the reporting on internal controls. And when you're reporting on the internal control, it is the management report on internal controls as well. And it is the external auditor report. So both are the requirements, right? Both have to do it. So auditor never tells the opinion on the internal controls. He tells the opinion on the financial statement. But in US, you have to tell that. In US, when you see the report of a listed company, they will have an auditor report on the financial statement and they will have an auditor report on the internal controls. So these are two different things in US. Now, Section 404 requires a management report on internal controls and requires an external auditor report on internal controls, right? Now, when you look at the management report on internal controls, you should know the contents of this report. You should know what this report contains, not the auditor report, right? So the examinable part of your syllabus is the management report. What does it contain? And what does this management report contains on internal control is given on the next slide. Number 1, a statement of management responsibility for establishing and maintaining control. So number 1, this report contains a statement of management responsibility, that the management is responsible for internal control systems. A statement of management responsibility for internal control systems. That's very simple. Number two, a statement of the framework used by the management to conduct the required evaluation. A statement of the framework used by the management to conduct the evaluation of the internal control system. A statement of the framework used to evaluate the effectiveness of the internal control system. Which framework you used? Obviously, when we evaluate something against the standard, which is the law. When we check the company, we check the company against the best practices or against the laws and regulations. So framework here is the law, right? Statement of the framework used. Which framework used? This is Sarbanes-Oxley, right? So which framework used to evaluate the effectiveness? That framework was done in the preceding topic, risk. That framework is known as the COSO, ERM. The COSO ERM to evaluate the effectiveness of the internal control systems. Number three, management assessment of the effectiveness. That's basically the conclusion of the management. First, they're telling the framework they used. Now the management assessment of the effectiveness, that the findings of the management. Then a statement of management assessment. A statement of management assessment, that's basically like the results of the evaluation of internal control systems. And the last, a statement that the audit firm has issued an attestation report, and the management is also telling that the auditor has given their attestation report. So in their report, they're saying a statement that the management has given, a statement that the auditor has given an attestation report on the internal control system. So internal controls, right? The section 404 is a very specific requirement on the internal control systems meant for the listed companies in US. And under this, the management has a responsibility, and so do external auditor have a responsibility. The management report on internal control contains the four key features. Number one, the management responsibility is part of the report. The framework used is part of the report. The management assessment is part of the report. And finally, that the auditor has given an attestation report is part of their report. So they're telling these four key things to the shareholder when they're reporting on the internal control system. Now, internal control system is a pretty simple area. You just need to revise through the management statement of internal controls. You need to revise through the need. Need is a very important area, so please do this very carefully. Need of an internal audit department. The best you can do is that go through this article, because if you read this article, this will resolve all your problems. So that is it for the revision session, right? In terms of the theoretical backgrounds on risk governance and internal controls, where you should polish yourself, fine tune yourself. And I hope these revision courses will help you in refining and fine tuning your pace towards your December exams. Now, I will be sharing with you the exam papers which you will use. I will be giving you a couple of exam papers like NA for ethics, football club for stakeholders, GLUC for internal controls. I will be giving you the case for LOHO, internal audit department. These are all the papers I will be sharing with you, and with each paper shared, I will be telling you what you have to do in this paper. So then you will write your points, only points, no paragraphings, and you will share your pointers with me. Or rather, the better thing is you write your points in your register for each question, and I'll share my pointers with you, and you reconcile. Okay, my pointers and your pointers, they're matching, or at least they're matching on 50%. That would be good. So I'll give you my pointers on all these questions, but first you will read these questions, you will see what you have to do in these questions, and you will make your own pointers after you have completed the revision course. And on the basis of those pointers, you will judge how much of your pointers match with my pointers, just for reconciliation, and you can learn the better pointers from my answer, right? And that marks the end of the revision session. I will be sharing this recording and the Word file as soon as possible, along with the papers and what exactly you need to do from each paper, which will be uploaded to you on the WhatsApp group. Thanks for taking your time out, concentrating on this revision session, and best of luck for your exams in December.